Let's see. All right. Let's see. All right. Let me let a few more people join first. All right. Can everybody hear me? If you were here Monday, you remember that I told you to keep the last 3 points of data in reference to the previous week highs, the previous month highs, previous day highs, lows as well. And you will see right here, put that back on my chart for you guys. Told you I'd show you where the entry was. Just look real close. What you want to see is how many times we actually come back and reference this. That's on ES, but we take a look at it throughout NQ. It's always good to reference back to that. So it's just something I wanted to show you guys. But even there, I mean, look, you're in a 650 macro. You can use it to come back lower to some form of sell side down here, equal lows, etc. This is where I took a trade earlier to that premium wick. Yes, hello there. Yes, is that immediate rebalance? Please confirm on daily chart. Let me look. Yeah, appears to be. Anyways, so still have both the data highs and the lows intact, so you really need to have those on those charts. I just have these equal lows here for reference. Now if you want to see, ES has actually already taken the data highs, right? But still important for me. But let me show you something. So this macro here, this is something you need to understand. You need to decide what your storefront hours are going to be. You take a look at this macro. If I just mark this out like this from there, what is, I want someone to answer what happened here. Genuinely, I need someone to tell me what happened here, because this is where a lot of people, and this goes for any macro in particular, but what happened here in this macro? AMD. No. What happened in this macro? Consolidation. Time distortion. Okay, good. Yeah, so this is simply something for you to learn and see market structure shift. No, I mean, no, because that's the high. The low that created the high is down here. So you got to be aware of that. But yes, time distortion and consolidation. No liquidity was taken. So this is something that a lot of you, like I said, I'm trying to provide more insights on these things. So no liquidity was taken. What does that mean you should do? This means that you need to be more patient. You need more patience. You must wait for more information. Yes, wait. That is the answer. Wait. If you cannot recognize it, a lot of people think every macro is going to serve a point of entry. That's not true technically, because you need to understand. I mean, if you went to a lower enough time frame, yeah. No. It's every macro. I got asked the same question yesterday, and I had to point this out. If no liquidity was taken in here, why would you take a trade? Because look at the probability. It's low, right? A lot of people thought we were just going to keep going higher, and guess what? We're going to drop lower likely. I mean, just look at I rarely get to see you live. This guy is the real deal. This is how a lot of people get faked out. So I try to explain, you just need to understand what's happening in some of these macros. What are they doing? Because some macros, they're not going to come back and take liquidity. And that's where you need to reference the previous macro, essentially. So if I reference this previous macro, which is going to be here, the only high that we took was this. And then we didn't drop back to this low. Neither on ES nor, let me just put this on here so you can reference it. So for example, if this were to, and this is all going to be dependent upon, discount, premium, and whatnot. But essentially, let's say, how can I explain this in a simple manner? If this macro, and I can almost guarantee this held an inefficiency in here. So if this macro holds an inefficiency, you can expect the next macro to expand. And then you want to exit at the end of that macro. So technically the next macro won't come down and take liquid. It could still take short-term liquidity and trade higher, minor sell side, and then go higher, but it's still something that you want to look for. Even like yesterday when I showed you guys like where's it at? Let me find the end of the day. So you had these equal highs here, for example. Of course the day ended, but as I was showing you, there was SMT here, right? As the macro opened, right? SMT here. So you could turtle soup this low and expect it to go here, or find an inefficiency that it hasn't traded to yet and get up there in that. But it's going to respect it. This market closed, so but essentially, if this was in, normal hours, or say like down here, this macro, for example, I would expect this to go trade back to here during the macro, or even after the macro. It would just, it's all depending on real. I prefer forward testing rather than back testing. I know that kind of is a weird thing to say, but I like real-time data to be able to predict where and why things are going to happen. Okay, but back to the point is, if a macro consolidates, you need to wait. So what do you need to wait for? Well, you got to wait for 9:30 open, obviously, because this is a manipulation macro. If I'm expecting it to manipulate somewhere, I would expect it to manipulate to a liquidity or an inefficiency. So we just need more data. And right now we're watching the bottom of this daily civvy. You can already see it's already referencing it. But like I said, I fully, it's 9:30 now. I fully expect this to go lower, not higher. Initially. But right now you're in between ranges. This is the same thing I discussed, I don't know, last time we had a news day and whatnot. So, and understand, guys, I'm still relatively new to streaming and Telegram tape reading. If you're new here, it is sometimes harder for me to get the points that I see out to somebody or via text or video before the move essentially can play out, or at the speed that it's going to happen. Because I may see something that says I'm expecting price to snap to the liquidity, for example. So in that scenario, when I see that, that's just an entry and then it goes. There is no I have time to tell you. So I'm trying to figure out how to go about that still, so bear with me. But anyways, one of the points that I was covering in my, if you're day trading, if you want to swing, this is fractal delivery, so you're more than welcome to do this how you'd like. Now, I do want to make note that these lows, what was it here? Let's see, when is this? I had them marked up. I cleared all my charts to redo this all. Something I'm watching is the lows did not get taken out this morning. So if they want to come back for them, they sure enough will do it. And you want to study where are they at. It's going to be these lows in here. Is simply these equal lows. So if you see price came to them but left them intact here, so it's fully possible to see them come back down here and take them before returning higher. A lot of people are not expecting that, but they were left intact for a reason. All right. So, does everyone understand why you need to wait for more intel here? Does everyone understand that? If we want to blow up the longs, the best case scenario is we're going to come down here. We're going to come down here. This is what you at least... In some cases, if you still struggle with ICT concepts, you may have a little bit of a retail mindset still. You still have to think outside the box a little bit. Well, ask yourself, what will provide the most damage to an individual that isn't aware of what's going on in the market? That's who you're going against, basically. Right now, all the people that don't even know what a macro is, they're longing simply because we went up higher. Right? I'm aware of that because I used to. It's good to be retail because you need to understand where you're coming from. So and it's taken me just as long as anyone else to figure out some things, but you know. Anyways, so we'll watch. I am watching that data low point, but like I said, ES has already taken that, so in reality, you could have already shorted in here if you knew that. Do you think we are in a Wednesday reversal profile? I don't know. Anything's likely. It's hard to say. It's hard to say simply because of on the daily. I know they have somewhere to get to. The damage down low has been done, so in my eyes, they're not going to stop until they get to their target. This is a premium in efficiency, but it is, I mean, it's possible. If they want to set up a way to kind of leave these intact and come back lower, get everyone short, and then go higher, that is a probability as well. So anyways, 1 second, guys. I'll be right back. All right. Sorry, guys. Had to take care of something real quick. I've already got short and get my profit after that time distortion. Yeah, so initially, like I said, we're just, unless you understood that the data highs and data lows were taken, you'd understand that you don't need to be long. You need more data. But guys, I mean, a lot of people, this is stuff that people do not keep on their charts that they should. These previous week highs, the previous week lows, daily highs, daily lows, those are key references on a higher time frame perspective. So right now, this is essentially the boring part of trading if you think about it, where you have to wait. It sucks, yeah, and I understand. And you're like, and then after moves play out, you're always like, well, I could have got in there. Yeah, that's the problem. Is a lot of it's hindsight. You need to be able to learn to see these things on your own and understand that, you know, where and why you should enter. You should have a reasoning as to why you're entering, and it should be based off repeating logic. What did I point out to you guys yesterday as well? Regular trading hours. Did I not tell you that your model can simply be, so we opened here. Let's see, open, and we closed here. your model could simply be back to there, right? I mean, it's just, there's a lot of moving parts, don't get me wrong, but look at that. Your model can simply be based off of that opening range gap. Look at the opening range gap here, come back and touch the high of it, trade lower right at 930. Do you understand how many models and how many? I don't personally like the term model. I don't. It's not. I don't like the term model because there's a lot of moving parts and you can literally make a model out of anything. So, but I'm sitting here telling you multiple things that you could be using. And it's on you. If you decide you want to chase 500 different things, well, you're not going to, good luck. Because a lot of people that come to me lack success simply because they're chasing or they're gambling or and I used to do the same things, don't get me wrong, but I've tried to change that whole, the bad habits that I built, I had to turn that ship around. But for me, I could not turn the ship around until I understood what was actually going on around in every aspect. Like, that's just how my brain's wired. It just didn't make sense to me. Like, I could have simply made a model and just submitted to that every day, whether it's the opening range gap, the opening range itself, the data lows and data highs. I mean, there's previous day low, previous day high, previous week high, lows, etc., etc. I mean, there's 500,000 things you can look at and take a trade off of. So my goal is to get the individual to understand that you don't have to know all of those things or master all of those things, because even I can't remember it all, and you're not using it all in one trade all the time. So but does everybody understand that? Is there anything, or I guess what I'm asking is there anything that you need more understanding on? Are you trying to specify a model? Are you trying to, do you need to understand more of the time references, like the macros, their functions, etc.? I mean, in terms of a macro, if you wanted to just simply wait for liquidity to be taken and attack the opposing end, and if on the week you're bullish, you should be, and I said this earlier in the Telegram, that you should be looking for sell side to be taken to go higher to buy side, right? And it's going to be the exact opposite when things are bearish. So, but anyways, when I am, and this is another thing that you can pay attention to. If we focus on, and I'll leave that on there for the people that want to see that this is the opening range gap. Maybe not that color. Maybe purple. But you also have new day opening gaps, new week opening gap. I mean, seriously, and those things are like magnets. So I'm literally trying to run you all through many things that you can focus on. And where you can take entries, why you can take entries. All right, anyways, let's just ideally, hypothetically speak on, if I'm looking at this, if I'm focused, this would be long term or more, yeah. I mean, obviously, in reference to here, we're in a premium to this range, and we have a gap is that a gap? No, but I mean, yeah, because price hasn't traded back to that yet. I mean, I'm not saying 500 points down. A lot of you people are here for signals and whatnot, but I'm not going to provide those. I don't even provide those to the other people that I actually help understand things on a deeper level. I'm not here for that, and they're not here for that. And that's exactly why I help them. I mean, if you want to get to the nitty gritty though, and you got to submit to a lot of time and a lot of work. That's a lot of people aren't ready for that. All right, so a few things that you can focus on. You have the opening range gap. Your model can simply be off that. If you go to new day opening gap, you're going to get, let's put a purple line here so you understand. So and it's going to be really small. So if it is small, so we got open here, and I'll change that in just a second. Let me just see if it's even, so 614. $15 minutes to the next. No, don't focus on the 10-hour candle. Focus on the 9:30 regular time hour candle. There's only 2 of them in the set. If you put on regular time hour sessions, you'll see that there's only 2 candles, 4-hour candles. It's 9:30 and 13:30. That's why you get your first presentation after 9:30 and your first presentation after 13:30. So I'm going to take that off. But if you see here, let me make these purple. So this will be the new low, bottom, this will be the high, and dog high. Look, we've already reached into it, yeah. So there's you another way that you can literally, and look at that. So tell me why you can't go in there and find something to be consistent on. That's what I don't understand. Look at that. I told you, if they want to blow out people, they're going to go short. They're going to blow out all the longs in here. And you got 4 minutes to the macro. But you can take your trade back to here. It's literally like magnets. I don't understand why people struggle. So we close below that. So watch. Now I'll be watching to see if ES takes this low, these equal lows. And I'll let this, it close below, so it's not going to be a turtle soup scenario. So hypothetically speaking, I want it to come down here in the next 3 minutes would be nice. But if that stays intact, then it'll be, I'll watch that, you know. And honestly, I need to, I mean, a lot of people, if you're not in this stream, you're missing out. And that's for the people that claim they still lack understanding, because you literally need to understand that there are thousands and thousands and thousands of ways to see the market and get algorithmic references to be able to trade and get a comfortable amount from the market and be happy with it. So I love when we trade under a new day opening gap. What I like to see is come back up, use it, and then go higher, especially when you have something like that. So you'll see it. I'm going to hide this for now so it's not, let's see if I can hide that. Alright, we'll take it off. ES didn't take, yeah, you're correct. ES did not take it. Now what are they waiting on? They're waiting on time. So if this stays here, what are they waiting on? Time. And so what are these? liquidity, right? Equal highs. What is so hard about that to understand? You just need patience, and you need to understand what you're, like I said, I love when they come back under here, come back over here, use this to go higher, right? But you just need patience. And you can take whatever side of the, you want to sell side, like I told you, simply data highs, data lows. So now we're in the macro, right? So what I would anticipate, no turtle soup, so I would just wait for a little bit of structure to form. So here's your macro. So what would I be anticipating these highs to be ran? Those are equal, so we'll see. Okay. N-dog overlapping FVG with N-day with NQ. Yeah. But what was taken here? That's a data low, right? And then everybody on Twitter says they took this model. And remember, when you're doing new day opening gaps, and make sure you're using 1614 as your closing price, not 16, whatever that last little point is. So it's essentially a balanced price range. So anyways, so this would be what I'd look for. See if they give me this. Now understand that I don't need to trade. I've already traded today. I don't need any extra peanuts from the market, but you understand. So now let me put this on your charts for you so you understand. So you have literally patience. No liquidity was taken. You need more patience, right? Did you wait for more information? Yes, you did. So during a key time, anywhere between 9:30 to 10:10, liquidity gets purged, right? And then you simply have, I mean, look how many points you have from here to here, right? So, and then you look at that, we drop back onto that, probably come higher here. In these scenarios, they're not going to give you much to work with. They don't want you in the move. That is the whole idea. Drop to a lower time frame, you'll see this on a 15-second chart. But they don't want you to be a part of things like this. This gets all of the retail emotional. And when their emotions are involved, then it makes them freak out. So now they're busy going short because they've seen this whole market do this. They're like, well, why are we not going? They shorted this fair value gap, for example. They're like, I'm going to short. And even if you don't understand the ICT concepts, you tried to short in the new day opening gap thinking we'll go lower to these equal lows. It doesn't have to go there. Not when stuff like this happens. When you see this key signatures for like, oh shit, like, okay, I see what's happening here. Does everybody understand that? Like, I need to know if you understand all of the things that I've explained so far today. And if you haven't, please feel free to rewatch this. Now, let's say it just sells off here. Then you'll be watching this. So you need to wait for structure, like I said. But let's say it does come back down here and does decide to go take these out. We'll let it happen. This is, I wouldn't have even entered a trade here yet anyways. I'd still be watching. And if I missed it, I missed it, and I'd be okay with that. Just FYI. If there was a turtle soup, be different, but there was no turtle soup because it closed below the low that I'm watching. These equal lows. So if they leave, so you gotta wait. That's the thing you don't understand. You need to wait. Structure needs to be present. And that is the basic understanding of price action is structure. So what would I want to see here? I would want to see this, if this low stays intact, I don't want to see it, and I know a lot of people dislike this, but structure needs to form. So, but really I'd be looking for a run up here. So I definitely have enough to get in on. That's over, what is this, over 100 points. So calculate your risk. I want to see that hold first. Damage has already been done. So with that holding, my ideology would be to assume that if this holds, this fair value gap, for example, and if we take the first presentation, you're gonna have to include, it's 931. We're in there now. What structure you want? You mean breaker block? What? Study, go back and watch the video on institutional market structure by ICT, and you'll know what I'm referencing to. I don't even look at breaker blocks or anything like that. I mean, I put it on my charts for other people, but that's not anything I'm watching. So with this holding, I'm going to see what they want to do. Oh. They want to come in and give a discount entry. Gotta be more patient. Just be patient. You mean moneymaker X model? Yes and no. I mean, it is a form. I mean, that's how, but it's institutional market structure. So there's a, just type in institutional market structure and watch that from ICT. Hey, please drop a like if you're watching here, so I know that this has provided some form of insight. I don't care if it's 20 people watching or 200. I'm still going to preach the same things that I always do: liquidity and inefficiencies. I'm not sitting here selling you a fancy dream of any sort, of any kind, and I don't plan on it either. So I want you to see we're still closing in this fair value gap back above. They're not letting any wicks close in there. So pay attention to that. But I'd prefer to see something come without this low being touched, coming back on. Unless they turtle soup it, I would want to see something come out of here before, or it's either going to be a turtle soup here or something comes out of this and comes back into it. So, and they close back in. See that close below there? And watch that too. But I'm watching this low. This low has importance to me. Thank you for the thumbs up. That's why you need to see. A lot of people lack the why didn't price go up if we're in a macro? Why? Like it's because it's waiting for something. Like it's very specific and it's gonna do it, and then every move is gonna play out the same way every time. That's why you have to study what's happening. Study the algorithm, not the candlesticks. I mean, yes, the candlesticks serve a purpose, but it's still past tense referencing. So they're referencing something that's already happened. So we'll see if a fair value gap forms out of here, that low, staying intact. That's what you want to see. And then what you'll see is likely, I don't like that has a volume imbalance tied to it, but ideally, if that is the fair, well, let's just put it on there because the wick's longer. What you'll see is a fair value gap form here, come back above, touch, and go, right? And it could go ahead and start respecting the bottom portion of it and then going higher. So let me put that, see that right there? First presentation, It already closed above the midpoint as well, so I'll be watching that. I like that where it does that right there. And then so my expectations would be still watching. Needs to close back above. Yep, still closing back above that midpoint. So ideally it could come here, there, or it can just go straight up. I'm not going to be having all that on my charts, but oh, sorry. Now, I want to see if it comes back in here too. If it leaves it open, then it's even better for upside support. The idea that it will go higher, but now you want to see if it closes. This is what I'd look for. Now, granted it closes in there in 5 seconds, it should just snap higher. But it did not, so that's okay. Still watching this. This is going to be important. Need a swing low to form in here. See if that body closes back above this. Need that to stay intact. It should go here. Ideally, I don't want price to drop back down. I would like to just see it go higher. That's what I'd look for. But I don't like that we're closing. We're in between these two inefficiencies right now. Or, sorry, these efficient PD arrays. But should go ahead. Now it should go ahead and finish. Should finish the job. And it should just snap there. Touches the bottom back of that, and it goes. Run will move when NQ can close above first presentation. Well, if you think about it, trade under here. That's what sometimes that's what used to fool me a lot, is that I would used to short things like this. I shorted first presentation, which you can, and it goes lower. You can do that, but what I've noticed is like it's the same way of how this is treated. It goes under it and then comes back above and uses it as support. My expectations right now for this move specifically is here. That's what I would like to see. To me, the damage is already done with the SMT, so and my entry would have probably been in here, and then boom. And if I got stopped out, that'd be fine. I'd watch this low and I'd re-enter if I needed to. I don't want to say they'll come back in here because they've already done what they need to do. In my personal opinion. The longer they spend in these, all right, there we go. Get up there. What is it, 907? Yeah. And it should just run. Well, yeah, as soon as you're right, as soon as it closes back above that, it knows. But it should probably not even give a chance for entry, in my opinion, to give you to come back up here. I would like to just see it go. Are you concerned that ES may equal lows? No, because that's SMT. That's personally what I see. I meant with the consolidation that's happening. Yeah, I mean, that's why I say you're in between two PD arrays, so it sucks when they're this close in reference, but I'm looking for this to just jet past this. If it doesn't, oh well. I'll watch this and see ES is already at that low here, so you got to watch that too. ES did not form any PD arrays in between, so you would need to expect that low to be swept to go higher. Like me, see that form of SMT now? And it's still respecting this. It's painting outside the lines, yes, I understand that. So your stop initially would be here. So you'd be entering in 84, let's say 84 for example, or let's say you got a higher entry, let's say 86.5. Well, you should not have more than about a 15 to 20 point stop loss. aka we're not trading in between ranges 804 low and 840 high. In between 840 low. No, to me, that, like I said, to me the damage is done over here. You don't. That's what a lot of people miss. It's stuff that like this. The damage is done to me. So to me, it's going here. Keep moving that. Anyways, and that's respect right there. So What you can't do is you can't be scared to buy things like that. That's all the more reason to add to a position if you know what you're looking at. Like I said, that's more. A lot of people shorted that thinking, oh, we're going lower. No, 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 no. You don't know what you're looking at. Still would like to see it close above. Yeah, so there it goes. So there's the close above. Now, I would not want to see it come back down here now. That's even more damage done. So to me, if it disrespects any of this, I'd have to wait for more information. And that happens sometimes when you get choppiness right here. Like, this delivery is not good to me either way. I don't like it, but I still think we're gonna go here. I anticipate price to go here. And for ES it'd be these equal highs. But anyways, get a drop. That'd be another add. Drops back in there and then goes higher. Hoping for a bull flag. Yeah, bull flag, bear flag, tomato, tomato. See how just the delivery is not the best? I mean, it's still... I fully intentionally think that this is going here, but like I said, the delivery is just... You gotta be patient. Just so people understand, that's SMT there. But that's turtle soup on ES. ES did not take this low. NQ did. Now you're in the silver bullet, but there you go. Get up there. Get to your home. I'm just watching these. Low-hanging fruit objective would be just these lows right here. So if you want, just put them there. Yeah, just those in here. Sorry, that's the macro reference. Yeah. Oh yeah, okay. Anyways, you get the gist. But really, that alone, let's say 86 and a half, 96 and a half, 06 and a half, that's 20 points, just extra 5 or extra 4, whatever. Will the overall target not be the CPI wick high? Yeah, but I'm simply covering low-hanging fruit objectives for people. I mean, a lot of people can't even, they can't find trades that are this simple. But see, the bad thing about backtesting so much is the market seems so sluggish compared to replay. Yeah, because I don't even do replay anymore. I mean, I never really did to begin with. I didn't really like it because I don't like the idea of things already happening. I want to see it before it happens. So forward testing to me is way better, but all of this, good. I need to be able to draw so people understand. Highlighter. That to me checks off. That to me checks off. And then I would just want to see it here. Now I'm also watching it here. But yeah, I mean, I don't know why, but the last pre-market sessions have been the best. And I don't know if it's summertime or what, but PM session and AM session, PM sessions have been way better than AM sessions. So in terms of delivery, obviously. Yeah. So another thing, I'm obviously my stop would be moved up just due to, I mean, look at this. There's nothing in here that states, hey, let's rush higher. Let's get into a rush. So I'd be at somewhere in between break even right now, because I wouldn't want to see it come back here. Needs to just finish the job, but you're right. It is very sluggish in terms of what it's doing. But either way, guys, I mean, these are equal lows, equal highs that you can focus on, regardless of what you want to do. Focus on that. I'm just trying to show you that low-hanging fruit objectives go a long ways. I know a lot of people aren't going to appreciate some of the things I said in here, so I highly encourage you to review. One last thing I'd say I cover is the whole premium and discount deal. So if you look here, this dealing range drops into a discount here. So it doesn't need to go there, but drops into a discount, and then that's your discount is the new day opening gaps and the sell side. And if you're day trading, all you need to see that on is a 15-minute chart or an hourly chart, just to get a feel of where you are in reference to price action. But once this plays out, that'll be it for me today. Like I said, the goal is still here. Short term. If you don't know your PD arrays, you need to go back and study them. I'm not here to teach you ICT concepts. I'm teaching you repeating things that are happening that I see, and I show you that. But you also have to respect your risk, and you have to understand the price action. If the price action leaves those intact, well, you're the missing puzzle for me. I've been studying for 8 now, but today I've got some. Well, I'm glad I could provide some insights. Omid, are you in the Telegram? Or just following me on YouTube? Yes, okay. Do you have a fancy name, or is your name actually Omid on there? A lot of these people have fancy names, but oh, okay. Yeah, that makes sense. Anyways, delivery is going to be crappy, but still. And now I got to watch here, because if these reach first, I'll be hesitant to see those reach. I keep these side by side because you need to be able to reference them, but tap it into that daily fair value gap on the lower portion. And as you're watching, ES is currently going to take these highs before NQ, it looks like. So obviously with the strength first. So Okay, but even on ES, for example, if you saw this, let's just say you saw the SMT here and you entered in the macro. Well, and you got the turtle soup. Okay, well let's just say you entered here at 49. That's 10 points on ES so far. You can't be content with 10 points. I mean, literally, let's just say you put on 5 contracts here at 49 and you had a stop loss below the turtle soup. That's a 3-point stop loss. You're risking 3 to make 10, right? Now, if you learn to do that over time and time again, how could you not make more than what you need, essentially? I entered on ES, but my stop loss quite large. Yeah, that's fine. Even if you use MES and if you see this and you enter here and you have a stop loss of 40, your stop loss is not getting touched. If you have a 5-point stop loss, your stop loss is still not getting touched, and you can make 10 points. So risk 5 to make 10. That's fine. Same with NQ. If you entered here somewhere at like 90, for example, if you just entered, you got in here, you hit the market order, whatever. You're on 990 and you put a 20-point risk. Your stop would be here, right? Which aligns with how you should place your stop anyways. This is the low that created the low candle that created that fair value gap. So that's where your stop should be anyways. And if it disrespects that, over time you'll figure out which fair value gaps you should be using. But if you have that kind of stop, you're risking 20 and you're already at 30, and then you're trying to get to 50 or 60 points. I see no problems with that over time. If you can continuously do that, there's no way that you cannot not be profitable. But what the problem is, I think that, and a lot of people like me to touch base on the psychology portion, but in terms of the psychology, it really does boil down to you at the end of the day. So if you just look at these equal highs, let's just say those are the same. You'll see that NQ did not take them and ES did. Did we? No, we're not there yet. Anyways, I fully expect that to be hit still. But anyways, on the psychology portion, you got to remove the whole emotional. You got to realize that ES and NQ do not have emotions. What's running the script behind the scenes is not emotional whatsoever. It doesn't care what you think. It doesn't care how you feel, and that's why you have to study it versus the market. The market's is going to make you emotional. It's designed to do that. It's designed to blow out people like this that want to go long, that don't understand that this macro is consolidating and that you need more patience and must wait for more. That you don't know what you're looking at in here, right? Smart money loads down here. Or the high frequency trading algorithms load down here. They know that. They know that this and this occurred. Think like them. You can side with them. You don't have to go against the machine. It's not going to happen. You're not going to win. So anyways, once this hits, due to the delivery, the way it's being delivered, these highs have been met, NQ didn't. With the way that the highs are being delivered, I do think this will be hit, but I'm not going to sit on stream while this goes here, right? So one last thing I'll cover is if you can drop to a lower time frame and see this on like a 15-second chart better, but you see this is the buy side of the curve, this is the sell side of the curve. right? Same here, by side. Now you have another curve, by side of the curve. And it does that all day long, every day. You just need to figure out where it's starting, where it's stopping, why it's starting, why it's stopping. How does it start? How can I get in? What are the repeating functions? What time is it? So, anyways, but see, to me, now sometimes I want, that is the being on the stream ordeal is fun, but like I tried to get rid of the fact that I need to trade in front of you guys, or I need to prove others wrong, because in reality I don't need to prove anybody wrong except myself. That I can do this, that I'm fully capable of doing this, and that I am disciplined enough to not need to push the button, to not try to, when you go start trying to prove things to others, that's when things like get out of hand. So although I dislike a lot of things that go on in the space of X and what people teach, it's not conducive to my progress to bash others or anything like that. So anyways, there's your high. It's very, very specific. So take profit could be there, and there's your delivery of 40 to 50 points. But I don't really have much else to cover. I mean, I've given you a lot of information to go over what you can use, how to use it. If you want to go more in depth, then you have to study outside of these candlesticks. So anyways, as you can see, how many PD arrays have I put on my chart? Two. That's it. You don't need more. You don't need a bunch of stuff. You need to just understand what you're looking at and be patient. A lot of you, before you even enter a trade, what you need to do is wait like 3 to 5 more minutes before entering, because I promise you, you're not waiting enough time for it to play out. So anyways, that's pretty much going to wrap up the stream. If you have any more questions, feel free to ask, or ask in the Telegram, whatever you want to do. I'll try to answer them to the best of my ability, but hopefully this kind of gave you some insight. If you're new here or recently joined, I encourage you to go back and review a lot of things from this YouTube video. It'll be uploaded on my channel, so you have a numerous amount of models you can use. And I don't like the term model, but some people need a model itself so that they can follow a rule-based ideology approach. That's what you need. So anyways, it's been fun. Like I said, it's 10:30. I'm done for the day. So I really enjoyed being here doing this. I could do this, all the time, but if you have any questions, feel free to ask. I'll talk to you later, guys.